Most people think investing is about intelligence, finding the next hot stock, timing the market, following gurus. It's not. Real wealth is built on discipline, patience, and understanding how money behaves over time. I've watched investors sabotage themselves again and again. They jump in when prices rise. They panic when prices fall. They chase trends. They celebrate early. They quit too soon. Meanwhile, the market keeps moving forward, completely indifferent to their emotions. Here's the truth. The biggest enemy of your money is not inflation, not recessions, not crashes. It's you, your fear, your greed, your need to feel smart. Most people don't lose money because the market fails. They lose money because they abandon a good strategy the moment it becomes uncomfortable. Investing is not entertainment. It's a system. And systems, not excitement, create wealth. Now understand something important. Every investor together owns the entire market. Professionals, amateurs, hedge funds, pension funds, all of them combined are the market. So when someone says they'll beat the market, remember, for every winner, someone must lose. And after fees and taxes, most people do. Fees never sleep. Taxes never sleep. Trading costs never sleep. A small 1% difference may not feel big today, but over 30 years it can cut your wealth dramatically. So instead of trying to outguess millions of investors, do something smarter. Own everything. Not a few stocks. Not the favorite trend. Everything. Today, with a few clicks, you can own thousands of companies across the world. No stock picking, no daily predictions, just broad ownership of global progress. When you own the market, you stop competing against it. You become it. That shift changes everything. Now let's talk about timing, where most people destroy their returns. They wait for the perfect moment. They sit in cash when things feel scary. Then they rush in after prices rise. They sell low. They buy high. They call it strategy. History shows something powerful. Missing just a handful of the market's best days can slash your lifetime returns in half. And those best days usually happen right after the worst ones when fear is highest. So if you jump in and out, you almost guarantee missing them. The solution sounds simple, but it's hard to execute. Stay invested. Invest regularly. Keep costs low. Rebalance occasionally. Ignore noise. Let compounding work. That's it. Diversification is another misunderstood idea. Owning 5 or 6 stocks is not diversification. Real diversification means owning large companies, small companies, domestic and international businesses. Some parts will always underperform. That's not a flaw. That's the design. Volatility is normal. Real risk is permanent loss from bad decisions, concentration, or emotional reactions. Owning the entire market reduces that risk. You're not betting on one company. You're betting on human progress. And over long periods, that has been a powerful bet. But here's the key: time. People want fast results. Wealth responds to duration. 10 years matters. 20 years transforms. 30 years builds freedom. Starting early matters more than starting big. Social media makes investing look flashy. Overnight gains, huge wins. What you don't see are the losses, the failures, the accounts blown up. Slow wealth doesn't trend. Steady ownership doesn't go viral, but it lasts. Build a financial foundation first. Emergency fund. No high interest debt. Live within your means. Then automate your investments. Every month. No debate. No emotion. Like brushing your teeth, you don't ask if today feels like a good day. You just do it. Over time, something powerful happens. Your portfolio grows quietly in the background while you focus on improving your income, your skills, your health, your relationships. Money becomes a tool, not an obsession. And one day you realize your investments grow faster than your paycheck. That's when options appear. Financial independence isn't about luxury, it's about freedom. The hardest part of this strategy is not understanding it. It's doing nothing when everything inside you wants to act. During crashes, doing nothing feels irresponsible. During bull markets, doing nothing feels lazy. But often, doing nothing is exactly what's required. You don't need brilliance, you need endurance. You don't need speed, you need consistency. Wealth isn't built by predicting the future. It's built by preparing for it. Own productive assets. Keep costs low. Stay invested. Be patient. Let compounding do what it has always done. Play the long game. Stay the course. And let everyone else argue about predictions while you quietly build freedom.